Robinson from Jacksonville, Florida. I'm the program manager for Builders Risk. This is welcome to another one of our chapters of our webinar series. We're really going to get to have fun today because we're going to go through some coverage forms, talk about coverages in a little pretty much detail. What we want to do is go through this relatively quickly, and then we'll open it up for questions. And I will say this, in the past, we've been very educational. We want to continue with that slant. It's going to be educational. But at the same time, we do have a very good coverage form, so I'll probably be working in some discussion on our form because we're very proud of it. I've kind of been instrumental in building it, so I'm very proud of it. But it is a good coverage form. And so we're going to get into Builders Risk, course of construction coverage. Before we dive too deep into it, I will say this is a uncontrolled line of business, which means we have a lot of different forms on the marketplace. Companies are very proprietary. You have not only all the admitted standard companies out there, but you also have the E&S market, and these forms literally are all over the place. So the best message I can give you today is, as an agent, you need to know the product you're selling. So make sure you read the form. I'm going to give you some little shortcuts today, things I've done because I've read so many forms. So maybe you don't have to read every word of every form. You can go to certain things and kind of decide which form is better for your client. So once again, we're going to talk about the Builders Risk coverage form in a fair amount of detail today. So just a little history quickly. This is kind of old property talk. I've been a property underwriter most of my career. So this is, you've heard of this, the basic cause of loss form. People forget this is like the basis of all property insurance, and these coverages were built into that basic form. And you say, well, nobody really writes that anymore. You'd be surprised. I saw a pretty sizable account written on a basic cause of loss form, Builders Risk, and needless to say, there was a lot of holes in the coverage, but it had been written that way for a while. And I've seen forms recently where companies even exclude theft. We take that for granted that would always be included. But so once again, the message is read the coverage form. Sometimes you can't tell by what a carrier calls it. I've seen, it called basic or other things. I've seen it called special. There's all kinds of names out there. So don't go by just the name of the form either. You got to actually look at it. So basic cause of loss form, fire, lightning, explosion, so on and so forth. Next type of form that we're going to talk about, primarily that's what we're going to talk about today, is the broad or special all risk coverage form. A number of years ago, the industry determined that you couldn't use the term all risk because it implied that everything was covered. For the sake of inland marine, I've been doing this a long time, I still call it all risk. The key to remember this is when you think about an all risk policy is you can't really go to a part of the form and see what's covered. Basically, you have to go to see what's excluded. A lot of times I get asked questions. One I get asked almost, probably once a month is, does your form cover sinkhole? So I have to explain to them that because we do not exclude sinkhole, thus it's covered. So you'll see that a lot. It's not like double talk, but you simply have to go to determine something's covered on an all risk form, go to the exclusions first, and then we talk about it. And then I threw that out there. Theft is included on all risk form because it's not excluded. Keep in mind, you'll see certain companies that have certain forms that have higher deductibles depending on the peril. We're all used to windstorm and earthquake and things like that, but even in theft, I've seen some very high theft deductibles. Some forms have certain criteria that if the exposures change during the course of the project, certain deductibles apply or certain perils are excluded. So it gets a little complicated on that. So once again, just understand the form that you're selling. Before we get into this next step too, I just want to touch on this too. I hear a lot of times where, agents are selling price, and we all know price is very important. But I think I'd like to kind of change the dynamic here and say, or the narrative, and say, why don't we sell the best coverage for the price? Or maybe even best as let's say the adequate coverage or the necessary coverage for the best price. Because to me, we shouldn't be bragging about how little we charge. We should brag about how much coverage we provide for X amount of premium. I think that's a better way of looking at it. And the next thing that I want to talk about as we get into these coverages is I'm going to spend a few minutes today giving you examples of every coverage, like real life claim examples of things that have happened to builders, developers, and owners of projects that are insured, not some abstract thing that might never happen, but something I'm personally aware of, claims that are ongoing that I've seen. So these are, we all know the coverage form is not important until there's a claim, then all of a sudden it's very important. So let's talk about some of the automatic coverages. When you talk about builder's risk / course of construction, you have that main coverage form sitting there. And then as you read through the form, the next thing you'll get to is what I call the automatic coverages. These are coverages that are built into the form. They're not negotiated, they're not endorsed, they're actually part of the coverage form, and they have sublimits for the most part. Usually there's a separate limit that applies only to that peril. The limits I put up there are our new coverage form, which means you automatically get these coverages. You don't have to negotiate, you don't have to ask. If it's $1 million project or a $10 million project, you automatically get these limits. All of these can be increased. All you have to do is ask us and there will be a charge. But built into the basic form with the basic rate are these limits. And these are very high limits in the marketplace. Property in transit, $500,000 is built in automatically. Maybe I bought a window package. I'm a builder and I bought a window package and now I have to transport it from the manufacturer of the windows to my project. So I have $500,000 of windows being driven down the road. Now maybe the common carrier has the exposure, but maybe they don't. So these transit coverages do apply. I've seen some pretty good sized claims in property that was damaged in transit or stolen. The key here is on builder's risk is this property meant to be installed in the project that we're insuring? As long as it's meant to be installed, then that transit coverage applies. So $500,000 automatically included, and that can be increased. You just have to let us know. Similar coverage, another very important coverage is property and temporary storage. We can stick with the window package. Maybe the window package comes in and I'm not ready to put it, install it in my home that I'm building. So I'm going to store it somewhere for a while. Well, maybe there's coverage on the warehouse, maybe there's not, but on our form, we have $500,000 built in automatically. So those windows are covered regardless of where they're stored. Expediting expense, another thing that we automatically include in our form, $50,000. Because of a claim, in order to trying to mitigate the size of the claim, you have to hire people, you have to pay overtime. So you have to pay more to reduce the claim. You would be reimbursed for that under our form. Soft cost, $100,000. That's always something that comes up a lot. You have the hard costs, which are the labor, the materials, and the overhead that go into a project. Then you have these things called soft costs. They could be engineering fees, insurance premiums, advertising fees. Because of a covered cause of loss, these expenses are going to reoccur. So we build in $100,000 automatically for reoccurring expenses because of a covered cause of loss after the claim. Ordinance and law. I think we all have heard that term. We understand what it is. Builder's risk is a little different. I mean, I would say if you're building a new structure, you think to yourself, what could possibly happen? Well, we had a case in California where a building burnt down, had to rebuild it. In the course of construction, the original course of construction, the building ordinance has changed. I don't know if it was the American Disabilities Act, but we had to rebuild the structure to different criteria. That expense to make it, qualify for the new building ordinances was a covered expense under our form. We build in $1 million automatically. That can be increased. Now, the reason I'm pointing some of these things out is these are not automatically included in all forms. They are on our form, and we're very proud of that. So go to those automatic coverages, look at the form you're selling. If you want to look at it, give me a call sometime. We could talk about it. Love to talk coverage. We have 11 other additional coverages that are built in automatically. I'm not going to go through all of them today, but that gives you an idea of the amount of coverage that's in the automatic section. So the next thing I want to talk about is some new coverages that we just added. Very proud of them, hot off the press. We have 3 new coverages that are now automatically part of our form. Once again, something you don't have to negotiate. Just once you sell our form, you automatically get this coverage. First one is a claim preparation expense. Kind of just by the title, you can tell what it is. There's been a claim. We come to you and say we need some more detailed records. So you have to go to your accountant and you have to, pay the accountant overtime. You have to produce some new records. That expense is now covered under our form automatically up to $25,000, and it can be increased if you need more. But it's a good little coverage. Once again, the time that we really shine as an industry or as an agent or a company is when there's a claim. These kind of things just make it a better experience. Hopefully as good experience as we can make it when there's a claim. The next one is blueprint and construction documents, $50,000. So let's say because of a covered cause of loss, the building burns down, and in the building you have some blueprints and other documents that were destroyed, construction documents. So now you gotta recreate these. There might be a cost to that. That would be included up to $25,000 automatically. That can be increased. These things do add up. And the last coverage, which I find very interesting, and only a few companies out there actually provide it, and very few provide it automatically, is fraud and deceit coverage. Just happen to have the form in front of me here. It says we cover theft of covered property when you or your agents, customers, or consignees are fraudulently induced to part with the covered property. So it's true fraud and deceit. Somebody had an example of one. This was good. Somebody went to a job site, convinced the project manager on the job site that they were there to pick up some of these materials. Our insured actually helped them load it into the truck, and the guy drove away with a fair amount of materials. So he was induced, and for whatever reason, thought that it was supposed to be somewhere else. So I have seen this coverage before. Once again, built in automatically under our form, and it can be increased. So now you're starting to get the idea. These automatic coverages with these sublimits make a big difference. It's really on how you're going to evaluate one builder's risk form compared to another. The last piece of coverages that we're going to cover very quickly, I would say, are the optional coverages. Keep in mind we have the coverage form, base form, we covered that, the all risk piece of it. We have the automatic coverages. The last piece was what I coin optional coverages. And these are things we all know about. They're not built into the form. You have to endorse them. And they have different insuring agreements, different deductibles, but they are available. And I think we'd all agree, we could go through some of these, but they're all critical to the overall insurance requirements of an insured. We've all heard of the green builder. The home's being built for green. Now they got to rebuild it. There's an expense to that, so that would be covered. Obviously, flood and earthquake. Contract change order is something I find interesting, and basically that is during the course of construction, they decided to upgrade the tile. So they have a contract change order. You can actually buy that coverage up front. So if you add this coverage, maybe it's done in increments of 10, 20, or 30%. So it just covers you in case they forget to tell you. Sometimes the contractor forgets to call and tell you, oh, by the way, I need to increase the value of this project. So that's a good little thing to sell in the beginning. We have some agents that sell it on all their policies. That's really up to you, though. It is an optional coverage, not mandatory. Delay in completion kind of is what it is. It's a time element coverage. I do think it's important for certain builders, and it's another optional coverage not built in automatically. The reason I bring some of these up is one of the biggest problems I see is when the insureds think they have coverage and they don't. Every time there's a catastrophe, every time there's a flood, there's a brush fire, there's an earthquake, or whatever there may be, a large percentage of the insureds, think they have coverage and they don't. So I do think it's getting better, actually, but when you see a catastrophic event, there's been a hurricane, hits North Carolina, you always hear, well, there was $2 billion in losses and $1 billion of insured losses. I mean, it's staggering to think that $1 billion was uninsured. Now, as an agent, all you want to do is make sure you offer the coverage. If the insured decides not to take it, then it's on the insured, not you. We had a pretty sizable claim in North Carolina this year, and exactly what happened. The agent had requested the flood coverage from us. We had quoted it. The insured determined it was too expensive, decided not to take it, and we have a multi-million-dollar building that was underwater with no coverage. I felt bad for the insured, and yet, the agent did their job. I think we did a job as a carrier, just no coverage. So that does happen. So just kind of wrapping up this whole coverage thing, I know I talk about it a lot, but I don't quite understand, agents to say coverage doesn't matter. And I've actually had agents tell me that recently. They do matter, and these little sub limits make a difference. When I say little, a $500,000 coverage automatic. Even if you have a larger builder, say a guy's building a $20 million office building, and he has a $500,000 claim, but it's one of these automatic sub coverages, and the policy that you sold didn't have that coverage. So now you got to tell the builder, I'm sorry, you have that $500,000 claim is not covered. Man, I don't want to be the agent to have that conversation. So I'd much rather say, first of all, sell a form that has as much coverage built in as possible, eliminates the problems. And second of all, have a discussion with your underwriter. I mean, a lot of these things, can be added. You just have to have the discussion with the underwriter to make sure. So these are all things that happen regularly on every job site, and it's critical. It's critical to the success from the agent standpoint and the program standpoint. So that's it. That's about 20 minutes on coverage. I could keep going, but I will spare you the details. I'll spare your time this afternoon. What we'd like to do now is open this up to questions. So if you have any questions, we'll wait and see what you guys want to talk about.
Hi, Jeff. One question did come in already. Would Blueprint possibly be covered under soft costs?
Blueprint covered under soft cost. It's actually a good question. Bear with me a second here. Got to think about that one. Usually I have these answers right off the bat. I guess I could punt on that one and say what I would say is it might be, but it might not be. So the fact is, if the coverage is there, we know it's covered in one section or another. I've seen valuable papers included before too. So there might be some coverage there if you have a valuable paper coverage. But I think the safe bet would be to say, I'd rather sell a form that has both of those automatically built in. So I'm kind of pushing our form. That's a good question. I have to give that some more thought, but there could be some coverage under soft cost too. So I think that's yes.
No other questions have come in at this time.
I like that. I stunned you all. Hopefully everybody's awake out there today. I love talking coverages. So I guess in closing, what I would like to say is that, because I just had another conversation today with someone, I'll tell you a little story. This is my best story. So I'm sitting at a Little League baseball game when my son was little, and I'm listening to some of the parents talk about insurance. Now, these are attorneys and doctors and various different types of professional people talking about their insurance. And so I'm smart enough to just sit back and say nothing because I don't want to be in the middle of that conversation. And the first thing that they all go to is the cost of the insurance. And they're talking about their auto insurance or their homeowners or whatever. And that's pretty much what they talk about. Well, I'm only paying this. Oh, you need to call my agent because I'm only paying this. And not one of them even thought to themselves like, well, maybe one of them lives in a $2 million home and the other one lives in a $200,000 home. That might have some impact on the cost of the insurance. But it's funny how the insureds don't really think like that. So we kind of have to change that mindset. It's not all about just the cost of the insurance. I had an agent not too long ago call me, and it was a competitive situation, and we're trying to compete. And they go, well, why don't I just lower the limit of the insurance? Then we'll be more competitive. That one actually took me a second. I had to think about that one and say, what, did they just say that? So my question was, well, what is the building worth? And they said something, and I said, well, my advice would be we need to insure it for that. That's not really a negotiated deal. A lot of times these forms have co-insurance penalties and so on and so forth, but we cannot play. That's not something you can play with. And same thing with these automatic coverages or, I guess what I'm saying is some insureds might say, I don't need Blueprint coverage. I don't need fraud and deceit coverage. Okay. Well, it's in the form, and if they need it, it's there. And the thing is, they think they don't need it until there's a claim, and then they need it. So the idea is, I think, is to give them examples of things that happen, common things that happen on, a number of times, not 1 out of 100, but probably happen almost on every project, and say, for an extra $100, do you want to cover that? If they say no, okay, but at least you offered it. So once again, knowing your coverage form, this line of business is a little different than work comp. It's controlled by the states. It's even different than auto insurance because it's controlled more by the states. The forms are the forms. Literally, these forms are all over the place. I've seen all kinds of stuff from major companies too. So, I know we spend a lot of time talking about, well, I only sell forms for A-rated companies that have been around for X number of years, and that seems to be that criteria. And that's important. I'm not saying that's not important, the ability to pay claims, but I would say also, maybe we need to really take a hard look at these forms and say, what am I selling? So without further ado then, I think I'm going to get off my soapbox. I'd like to leave you with our contact information. Either myself or Donna are available anytime to talk coverages, talk pricing. We'd love to take a look at whatever builder's risk exposures you have. And you can get a hold of us by calling us, emailing us. We're on the website. So I think, I think that's it. So I greatly appreciate your time this afternoon. And stay tuned. We'll be doing more of these educational webinars in the future, and you'll be the first to know. So by all means, have a great day and talk to you soon.